Great day, everyone. I'm your host, Paul Lawrence Fan, host of Wealth Academy podcast. And today we have a financial expert on who is going to share some very valuable information to the entrepreneurs and also small business owners who are out there. So, welcome to today's show. And our mantra is wealth is more than just money. But our guest today is Aryeh Sheinbein, and I want to introduce him to you, and then I'll go into his bio. How are you doing today, my friend?
Good. I am well. Thanks.
Fantastic, fantastic. I'm going to read his bio here and share it with you so you can learn even more about him. Aryeh has worked for numerous Fortune 100 companies and over 20 investment management firms that have aggregately over 1 trillion of assets under management. He has a background on Wall Street that gives him the financial know-how to invest wisely. And he combines this with his consulting background, in which he helped start multiple companies from scratch and assisted large businesses with pivots. Of course, we have the pandemic and more to start multiple companies. And he also helps with them to change the major processes involved. And he is one individual who knows how to grow your money and your business successfully and sustainably. And so today we're going to be talking about wealth creation for the long haul. So Aryeh, first of all, let's talk about your name. It's very unique and one in which I want my listeners to learn more about it. To me, it's very powerful. So let's share that.
Sure. So the name Aryeh is a Hebrew name, and it means lion in Hebrew.
Uh-huh.
So it definitely comes with a fair bit of power. It also tends to have some regalness associated with it as well.
Fantastic, fantastic. I think it's very powerful and something I want people to know about because it also states that you protect people's money like a lion.
That is a true statement. I guess as I've gotten older, I've obviously gotten a little bit more conservative with some of the investments I make. And at the same time, the way I think about things is like, I generally don't actively manage other people's money. I more guide them and educate them. But if I ever like lose my own money in something, I am way more okay with it than if I were to have lost someone else's money. So principle number one is right, like protect the principal, right? Protect the capital. And then number two is kind of grow it. But if you don't protect it, it kind of has a big problem, right? Like if your risk reward is out of balance. And so I think, yeah, it definitely kind of speaks to both my name and my personality as well.
Yes, that's wonderful. And let's talk also a little bit while we're at it that you also lead Inside the Lion's Den, the podcast.
Yes.
Let's
So,
talk about that. I listened to a few of your episodes as well.
oh, thank you. So, yeah, so Inside the Lion's Den, it's funny because most of the time, like if you don't know what my name means, the podcast like has a dual meaning, right? Like the idea is that when you go in business and any whether you're an employee or you are the business owner or the entrepreneur, right? There's always things you don't know. And most of the time when you get into something, there's, let's say, 10 things that you know are challenges ahead,
Yes.
and you don't necessarily know all the answers, but you know these challenges exist and you're going to have to solve for them or hire to solve for them or whatever it is.
Yeah.
But on the backside of those 10 are probably 10 more things you didn't even know that you didn't know. And so that to me is like that dark unknown place that's effectively like a lion's den, right? So a lion's den doesn't truly exist, right? The lions live out more in the prairies than they do in the den.
Exactly.
But it's like this dark, scary, unknown place. And so at the same time, then the dual meaning is that it's kind of like it's my home in the sense because it's Aryeh the lion, so it's my den. So that is the concept behind the podcast.
Yes, we have empowered viewers and listeners to understand the power of your awesome name.
Well, thank you.
Yes, fantastic. And one of the things that I would love for you to share is that the fact that you talked a little bit about it earlier, how you protect people's money. We're talking about entrepreneurs, small business owners, and you take that money you invest it, and you grow it so that they can stick to what they do best, which is managing the business. Please share how you go about doing that.
Yeah, sure. So just for clarification, I'm not a registered investment advisor under the SEC. And so therefore I don't actually actively manage anyone's money.
Okay.
And the reason for that is also, I feel like it's very important for people to have an understanding of what's going on with their money. And so one of the challenges I find in the financial services industry is that everyone is generally selling a solution that fits the person selling it, not necessarily the person who's buying it, right? Like, so I like to be what I call product agnostic. And it's a phrase I kind of made up in the sense that if you go to someone who's an insurance broker,
Yes,
he's incentivized to sell you insurance.
absolutely.
And if you go to someone who is working at Edward Jones or Merrill Lynch or any of these, asset management firms, they're incentivized to get you to give them their money, give them your money, and have them manage it, whether it's in mutual funds or stocks or whatever it is.
Sure.
And their incentives are to kind of keep the money there. But who's looking out for the kind of global picture of you, right, and your wealth?
Yes.
So what I generally want people to do is to first get educated on what is the goal that they're trying to hit, right? So you mentioned it, like wealth is not just about money.
Right.
Really at the core, right? It's about your time. It's the freedom that people are really after. At the end of the day, the money is what's objectively trying to get you the freedom.
Exactly.
And so the idea is like, if you want freedom,
Sure.
first and foremost, you actually have to know what that number, like where the goal of freedom is. Exactly. It's kind of like you get in the car, now your phone, Waze, GPS, whatever you want to call it. Like if you were going somewhere, you didn't know where you were going. Or I should say, you knew you wanted to get to the mall, but you didn't know where the mall was, or you're in a state you don't know. You needed direction. You needed a roadmap.
Absolutely.
But the only way you can get the roadmap is because you put the destination in. You put the fact that you want to get to that mall or the airport or whatever it is. But if you get in the car and you're like, okay, I don't know where I am, and you're like, okay, I'm going to drive, the GPS or whoever you're getting directions is going to be like, okay, where do you want to go? Because you need an end destination, or at least a midpoint destination.
Exactly.
And so financially, in terms of wealth, it's the same thing. If you don't know, like saying, hey, I want more money, like first of all, more money can always never be enough, right? You could always want more and more and more and more. But number two is like, what are we trying to accomplish? Like what are we trying to do? Are we trying to have enough that we can replace our income? Are we trying to have enough for future generations? Are we like, what is the objective goal?
Exactly.
Then we can create the plan and say, okay, now that we know where we want to go, okay, how are we going to get there? Let's create the roadmap. Let's look at the investment vehicles. Let's look at the different products, so to speak, that we can use to kind of achieve that wealth.
Absolutely. Absolutely. You're absolutely correct, because if you don't have a goal, you don't know what you're looking for, and you need clarity surrounding those financial goals as well. And you mentioned also a piece of it being generational, some generational wealth, putting that in there as well, because we still have to take care of our needs, but we also want to look at that family, taking care of the family as well.
Exactly.
So I think that's really great. So when we look at money, for example, what do you think? What is your concept on the Bitcoin or the cryptocurrency? I know we don't have a lot of backing from the federal government on that, and a lot of people lose a lot of money, so to speak, virtual money in their wallet. What is your particular position on that?
So I happen to be a big believer in cryptocurrency in general. I believe the future is very bright for it. Obviously, Bitcoin is the leader. Ethereum is probably the number 2 largest coin. Then you have coins like BNB, Solana, Cardano, a lot of up and coming coins. I do believe that if you go back 20 years ago, even 20, 25 years ago, if you look at the idea that email was going to replace snail mail, it sounded pretty crazy.
Yes,
right? And And if you look back when Amazon started and they were selling books online, it seemed interesting, but kind of weird, right?
Exactly. Especially compared to a bookstore.
Correct.
Uh,
Exactly. And so when these ideas come out, and like if you think about it, like we used to call the internet like the information superhighway, right?
Correct. I
Like
remember
cyberspace,
that.
right? Like this place.
I had hair when that came out.
Yeah. And so if you think about what's actually happened, like the world has changed a lot in 20 to 25 years.
Sure.
And if you then actually fast forward to about 5 years ago, what's evolved in the last 5 years to today
Uh-huh.
has been pretty insane.
Oh, yeah.
And if you then go back like 1 to 2 years, what's changed, you see the speed at which things have changed is dramatic, right? Like the number of
Tremendous.
people pre-pandemic, how many people, would say they shopped on Amazon? Let's say 50, 60% of the population in the United States.
Exactly. Yes.
Right. But now, well, what's the number? Like 90%, 95% have
Probably
shopped online.
closer to 200% now.
Yeah. Right. So
everybody, everywhere.
even last year in December of 2020, Shopify, the company, on their fourth quarter earnings call, they actually said that what they saw happen in 2020
Funny.
was basically a 10-year acceleration of what they expected.
Yeah.
We basically jumped to 2030 in their minds.
And the pandemic was the perfect storm, if you will.
Yeah, correct.
Yeah.
So going back to the initial question of cryptocurrency, I believe that we will get there. I don't know the timeline, and I don't necessarily know definitively the use case of every coin. And so the challenge is there's like, so Bitcoin has taken on the gold, right? It's the storage of value, right?
Yeah.
And it's clear that it's not going away. It's clear that governments are accepting it.
Sure.
We now have
accepting it. Yeah.
Yeah. And so I actually tell people in general, like to have 1 to 10% of their asset allocation into that asset class makes sense. And it may be for certain people, depending on your age, it may be higher than that. But 1 to 10% is a reasonable starting point. Then there's a lot of junk coins out there and crap coins where people are just speculating and guessing and basically going to a casino, but they're doing it online, right?
Exactly. That's true.
But there's going to be use case, like real use case, like DeFi, which is decentralized finance. Sure. It sounds scary, but it will likely upend the banking system as we know it.
Yeah.
And the fact that it doesn't have government involvement is kind of an interesting thing when you look at government today. Like there's probably a lot of things that we could do without, right? Like I look at government today and I say they don't have all this tax stuff. Like they don't have a revenue problem. They actually have a spending problem. Like if I were looking at the government as a business, I would say, well, your business, your revenues are fine. Your expenses on the equation are out of whack, right?
Exactly, for sure.
And so having less government, I don't think is necessarily a bad thing.
Yeah.
And I think the decentralization of currency, where it doesn't need this middleman, it doesn't need some of these things. It sounds scary. I know, depending on your age, it could be like really, really frightening, but it's not necessarily a bad thing. And so like, I'm kind of I'm a backer, like I kind of believe, and I have, a decent amount of asset allocation there.
Oh, fantastic. Thank you for answering that, because it's something that everyone is talking about.
Sure.
Conversations taking place everywhere. And I know a lot of people want to get in it. And some people are a bit fearful of it. Because, they're looking at how to maintain what they have.
For sure. And so I would say, like, because I'll give you a for instance, right? So my parents, are alive and well. And I talked to my dad about all this stuff, and I have been getting him more and more into cryptocurrency and moving his asset allocation, to get into that 1 to 10% range.
Sure.
And the first challenge with most, people who are a little bit older, especially like retired, and like this sounds a little scary, is you're used to going to whatever Chase for your banking, or Wells Fargo or Bank of America, and you log on online. And that probably took them, an extra few years to get comfortable with, right?
Absolutely.
And then, they're at Schwab or Fidelity or TD Ameritrade, right? Like, so you now have these on ramps to the securities industry.
Sure.
Whereas crypto, it's not, the truth of the matter is it's not super simple today, right? Like the easy on ramps are like Coinbase, Kraken, Binance US. These are the easier on ramps, but from a user perspective, they're a little bit challenging still.
More complicated.
Right.
Understand. Yeah.
And it doesn't integrate with other things. And if you want to move the money around, you're not 100% sure. You have this 25-digit wallet and you don't, it kind of goes into literally you send your money into the ether and you're like, I hope it gets there. And everybody, like there's 100 warnings on the website, right? Like could lose all your money, like.
Oh yeah. I've seen a lot of that.
Yeah. So I think like if you look at some of these platforms that are mainstream, they may be higher expenses from a fee, cost and some things like that. But as you get comfortable with it, if someone's like, hey, how do I start? What should I do? I think if you look into platforms like Coinbase or things like BlockFi, depending on your state, there may be some state regulations around some of these things. But ultimately, a lot of these sites now have what are designed perfectly for dollar cost averaging. Just like if we were going to buy the S&P 500 index every month or every week by a little bit, you could do the same with Bitcoin or Ethereum. You can dollar cost average and buy fractional pieces of the coin.
Exactly. Kind of like with stock.
Yeah. Yes, correct. So I equate it to a stock or a mutual fund, and you're just like you're going to add to it every week or every month. You just do the same here.
Got it. Excellent. Excellent. This is a masterclass, everyone, brought to you by Aryeh Sheinbein.
Thank you.
Well, let's talk just a little bit, Aryeh, about business owner, an entrepreneur. How do you help them to focus in on the business aspect while you're protecting the wealth for them? Again, I think you mentioned it earlier about having a vision or goal for doing so. Perhaps if you could provide an example of how you might go about doing that for our viewers and listeners here.
Yeah, sure. So I think the first thing that I help clarify for people is, in today's world, we are marketed to every second of every day, right?
All the time.
every platform or whatever we're watching, whatever, there's an ad for something, right? Like you can't scroll 3 minutes on Facebook without seeing 6 ads, right?
That's right.
Instagram, TikTok, whatever, you name your platform.
Television, everything.
Yeah, exactly. And so the idea is that a lot of times people are being marketed to in a way that it implies that it is an investment strategy or it is an investment opportunity or it is a way for them to grow wealth.
Sure.
But really what is actually, if you look at the core, what it actually is you are going to have to trade your time for this money.
Yeah, time for dollars.
Right. Which means that you're going to take the time that you're currently using for your job or business, and you now have to reallocate it to this or that, whatever it is. It's kind of like, hey, if you hear me talk about I fix up homes and now I flip them, it sounds great, but it is not, unless you're going to give me the money. Like it's not a income producing opportunity unless you are going to spend the time to search for the home, decide if it's a good price, negotiate the contract, hire the contractors or do it yourself,
rehab,
then rehab it, and then actually go put it back on the market and then do this whole thing again. If you're busy running a dentist practice, a pharmacy, a construction company, or an online business, right? How are you going to have the time to do these other things? And so the first thing that I want people to understand is the distinction between income and that is really like job related, like active income versus passive income, right? And so the way I help them is I educate them on the products, right? I say, okay, these are your opportunities that you can invest in a more passive way. And I say, listen, how much, like, let's first work on that goal, right? So we get the goal and now we're like, okay, what's our path? They typically, the entrepreneur, the business owner, they're in the business because they either really love it, they're passionate about it, they're on a mission to help people solve a problem, whatever it may be, right?
Sure. Uh-huh.
And if I can get them to stay focused on that without having to worry about all the other things, I'm going to educate them on what these other things are, and then show them opportunities. Say, hey, listen, if you feel comfortable with crypto, if you feel comfortable with stocks, if you feel comfortable with real estate, here are the methods that you can put the money to work in these asset classes without giving up time from your job.
Got it.
And therefore, like, a lot of times the real estate is a good example where some people don't have access to opportunities.
Sure.
Or if they have access, they don't have a good idea whether this is a good or a bad opportunity. It sounds like a great opportunity,
sure.
But the person who's pitching the opportunity is incentivized for it to sound like a great opportunity.
For sure.
And so again, I'm basically playing quarterback for them, or offensive coordinator, to call the plays for where they should be going.
Exactly. So you're giving
based
them,
on the goal that they want to hit.
Exactly. You're showing them what is the risk reward of that investment.
Correct. Without an incentive for them to do it or not, right? Like, I'm not incentivized whether they get into this opportunity or that opportunity or buy this business. I want them to be successful, and I want them to do well over time.
Fantastic. Fantastic. And I know for business owner, that means a lot, because as you stated, they're very passionate about what they're doing. And so if they can find something on that passive side, that really does the job for them.
Right.
But they can have not only their business, but also have something in addition to that to enhance it, which is wonderful. So let's talk just a little bit, Aryeh, about contributing to 401k plans. And do most employees find this is something they should still continue to do, or should they take that 401k and invest it in real estate and other properties and products out there?
Sure. So obviously the number one answer is it depends, and I'll give you what it depends on. So are you self-employed and you are the owner of the business? Or are you self-employed and you are the only employee, right? Like, so it's really like a solopreneur.
Exactly.
Are you part of a bigger organization? And what is your current tax situation today? Okay. So we're going to break down some of the products, meaning the 401k items.
Yes. And tell us more.
So we'll kind of talk through some of them and see the pros and the cons and what have you. Okay. So if you are an employee and you work for a company, whether big or small, and they give you the opportunity to invest in a 401k, typically the 401k is standard 401ks are what we call pre-tax dollars, meaning it's a tax deferral vehicle. So any dollar that I put into it today, I do not pay taxes on that income. It comes out from my paycheck directly into the opportunity, and I don't pay taxes on it today. I will pay taxes when I pull it out at 59 and a half, right?
Exactly.
So you can't pull out the money before you're 59 and a half. So this is a standard 401k. If your company offers you a match, okay, so a match means if I say to you, I will give you, for every dollar that you put in up to a certain amount, I will give you 50 cents on your dollar.
Sure.
So if you put in $6,000, I will give you $3,000.
Exactly.
That is free money to that employee, right? Exactly. And that is a 50% return on your money.
Yes, that's very good.
And so that's pretty impressive. Before you get any return, you start out of the gate with 50%, right?
Exactly.
And so I would say, okay, definitely try and use the match if you have a match, okay? If you do not have a match, you now need to look at a few different things, right? So is this a tax deferral, or is this, there's another program called the Roth, right?
Yes.
So there are 401k Roths as well.
Absolutely.
The difference between the Roth and the traditional is the Roth, you pay the taxes going in, right? So it's not a tax deferred program. You pay taxes up front, but you do not pay taxes on any of the growth ever.
Correct.
And that's with the current tax laws. Should that change, when you're listening to this 20 years from now, I don't know. but that is the plan of the Roth. And so there's tremendous long-term upside to that, right? You're investing, dollars today. And so if you have that ability, the other challenges with 401ks are when you're part of a company, the company decides what investment opportunities are inside this vehicle.
Exactly.
Right. And so you may be limited to 5 to 10 different types of funds.
Sure.
And they may be good. They may not be that great. The second you leave that company, you want to roll that over.
Right. To the new company.
Well, I would say, I don't know that I would roll it to a new company. I would roll it to my own. So if you have a traditional 401k, it could become now a traditional IRA.
Okay.
And if it's a 401k, a Roth 401k, you can make it a Roth for IRA.
All right. Got it.
Okay. You can just convert it over. It's very simple. And now, if you convert that over to Schwab, Fidelity, TD Ameritrade, you will have the ability to invest in all stocks, all mutual funds, all anything. And you are now in full control. As that may sound scary to some people, it is actually a lot more flexible for you.
Absolutely.
The other thing is, once you take control of it, is that you now can also, if you should desire, you can get a self-administered plan. So it's not going to be at Fidelity. It's not going to be at Schwab. You have to find other firms like, solo 401k type of thing. You can check that out. And then you can use those platforms. There's a different administrator. They will a lot of times allow you to invest in real estate directly.
Exactly. Yes.
And so now you have the flexibility, and it will have all the tax benefits, as well. But as long as it's inside the employer component, you won't have all that flexibility. So maxing out, so I think the 2020 cap is like $19,500 of a contribution on a 401k. And on an IRA, which is if you're using your own stuff and your employer doesn't offer you a 401k, it's much lower. It's somewhere of the 6,500 or something to that magnitude. And that, again, depending on what your tax bracket is, it may make sense. Like if you're paying lower taxes today, it probably makes sense to use a Roth versus a traditional. But throwing all that money in there obviously comes with the challenge of not being able to use it till you're 59 and a half.
Exactly.
Unless you need it, then you could take it out with a penalty. The benefit of a Roth program, the Roth IRAs, is you can always take out without penalty the amount that you initially contributed every year.
And whatever you built on that accumulated that part.
Yeah. So let's say in theory, I put $6,000 into a Roth IRA, and over the next 5 years, it grows and it becomes $12,000.
Right. So
I can pull out the initial $6,000, not pay any fines, and I'm fine. If I wanted to tap into the other $6,000 that was there, then I would have some penalties.
It's going to cost.
Yeah. So, the net of this is it has its pros, it has its cons. Understand like the limitations of the vehicles that you're in. So what can you actually invest in?
Yes.
And will you need this money before then, if you intend to either live off of it or do something else with it? And what is your tax rate today versus what you think maybe your tax rate potentially looks like in the future?
Exactly. Yes. That's excellent. Excellent. And I just think that's a great opportunity for people if they happen to have a 401. I also know that, let's say, for example, the federal government, they also have a thrift savings plan, TSP. And so I know a lot of people who have invested in that, and then they're concerned about, okay, what do I do? I'm going into retirement, and they may not be at retirement age, that 59 and a half. And so a lot of them, what they're doing, they're pulling some out, putting it in insurance policies, some in real estate, et cetera.
Correct.
To protect it, at least with the insurance.
Yeah. So the insurance, like, I assume you're talking about like whole life insurance.
Or whole life.
Yeah. So the cash value whole life type of policies.
Exactly. Yes.
Yeah. So that's probably like a whole hour discussion in of itself.
Exactly.
And definitely talk to more than, like, if you are thinking about getting into one of those, definitely speak to more than one person, because there's a lot of different strategies around how to use them.
Exactly.
Whether you use it as what we would call a cash vault or your own bank, or if you want to design it. or if you want to design it more for a retirement fund, like you were alluding to, drawing down in retirement.
And having a death benefit.
Yeah,
In there.
correct.
Yeah.
And there's tax strategies around it too. So it's definitely a lot more complicated than probably some of the YouTube videos want to make it sound. But
I know.
but again, everyone's looking to do something, right?
Yes. Yes. Thank you for that. Now, Aryeh, when we look at some entrepreneurs, some small business owners, some of them don't know what to do with their money. So how do you help them in that case? Again, we're looking at them having a goal, both short and long term. So how do you help people who don't really know what to do with the money that they're making and generating that revenue?
Yes. So I think once we have that goal, we have a very clear understanding of where we want to get to. And then I help them reverse engineer the rate of return that they will need to get to achieve that goal. When you figure out what the rate of return is, you now can start to look at what type of risk you're willing to take to get that rate of return.
Exactly.
Personal finance is exactly that. It's personal.
Yes.
And if I'm willing to invest in a startup because I want to make 10 or 100x my money, but I know the risk is I could go to zero.
For sure.
But I'm going to sleep okay with that. That doesn't make that a good plan for you because you may not sleep well with that, right?
Sure. Absolutely.
And so you have to start to learn your risk tolerance and know who you are as an investor.
Exactly.
And once you have that, and you have your rate expected or needed rate of return.
Yes.
And you have your risk tolerance.
Yes.
I pair the two to start to show opportunities that kind of fit in that wheelhouse.
Fantastic. Fantastic. So you covered a lot of great information today, shared a lot of content, rich information, which I know the viewers and listeners are going to really appreciate. So we're at that point where the interview is coming to an end, and I'd like to know if you have anything else you'd like to share with the viewers and the listeners at this time, Aryeh.
No, I think we covered a lot. I mean, obviously we could probably talk for another few hours on this stuff, but I think if you want, more on general business, then the podcast is great in the sense, from that. So Inside the Lines Then podcast. If you are like, hey, I'm thinking I really want to figure out how to get to my goal, and I want to figure out like what are these rate of returns, the best place is probably to check out futurefundme.com. That's really a place where you can start your journey. And if you're a business owner or someone who is an entrepreneur who's like, no, I'm seeing success, but I need someone to help me more hands-on, then you can head over to solutionadvisory.com and learn more there.
Fantastic. Fantastic. I think it was just an amazing episode with you, Aryeh, and I'm honored to have you here on this. And I would like to bring you back to talk about some more issues in the future as well.
Sounds like a plan.
I'd really appreciate that. So thank you very much. And I also know that the viewers will do the same. I want to have all the viewers and the listeners to go out there on Apple Podcasts and rate and review Aryeh's episode here today, which is episode 150. 150, Aryeh. I can't believe it.
150. Congratulations.
14 months after starting, that's 150 episodes.
That's amazing.
So I've had some amazing guests on, of course, including you. And it was just awesome having you here on the show today.
My pleasure. Thank you so much for having me.
All right. Thank you. And for all the viewers and listeners, thank you so much for being the audience for us in our podcast community here with Wealth Academy Podcast. And don't forget our mantra, wealth is more than just money. And Aryeh shared some of that with us today in terms of what you want to look for, setting your goals, financial goals you have if you're entrepreneurs, some things to look out for. And he can help you. As I have it here on this roll here, go to www.solutionadvisory.com and contact Aryeh, and he can certainly help you. So thank you all so much and have a great day. I'll see you on the next episode of Wealth Academy Podcast. And Aryeh, have a great day, my friend, and continued excellence in all that you do.
Thank you. You as well.
All right. Thank you.